All right, guys, another edition of Broadview Table Talks. Let's do it. Today, we're going to be talking about how to find deals in real estate in Toronto for multifamily, right?
Yep.
Okay,
So how do you find it?
Gotta look, man.
And video.
I don't know.
And
That's
videos.
it. That's it. No, a lot of deals out there. A lot of people look for cash flowing properties, right?
Yep.
That's the biggest thing. Does it cash flow? Screw you, man. Your cash flow is your job. That's what it takes. As long as you can carry the place. We just talked about last week. We talked about how as long as you can carry the place, it'll appreciate in value. There's 4 ways. Okay, what's the 4 ways to make money in real estate? Who knows this? First one.
Mortgage down. Mortgage pay down.
Paying down your mortgage. That's right. Just by guarantee, by default, in 25 years, your place will be paid off just by paying a mortgage, right? Unless you go line of credit, interest only, whatever. Maybe do a 30-year, but you're going to be paying it off by 25 or 30 years for sure. That's one way. What's the second way?
Appreciation.
Price goes up. Everybody knows that. Everybody loves it. That's the way in Toronto for the past few years. It's going up in price, right? Speculative in nature. Who knows how long it'll last for, but it will happen, right? Because of inflation. We just talked about that too. The currency being debased, right? So it's definitely going to go up in value based on that alone. What else?
Cash flow.
Cash flow. Everybody thinks cash flow is a way to make money in real estate. I disagree. Unless you have a 100-unit apartment building, 200-unit apartment building, it's hard to make the spread now because everything's so expensive, right? What I mean by the spread is what it costs you to carry with mortgage, maintenance, taxes, insurance versus what you get in rent. It's hard to make that.
Yeah. Some people just get break even at that point.
Break even at best, I would say even. And that's what I'm trying to say. Cash flow is not the way, it's not the problem. That's just an excuse for not to get into real estate. And the reason why I like multifamily is because you can get economies of scale so that you can potentially get cash flow positive or even break even, right? But that shouldn't be a reason to stop it, in my opinion. That's, it's common knowledge in like the States, right? If you listen to, say, Bigger Pockets or something, everybody over there, all those podcasts say, my biggest criteria is buying cash flow properties. I'm saying, you idiot. Buy something that appreciates in value. That's where you really make your money at the end of the day. And what's number 4?
Tax deduction.
Tax benefits.
Sorry.
There you go. Tax benefits. There you go. Oh, you got it.
I was trying to give him one.
Oh, yeah.
He'll get it one day.
Tax deductions.
Tax deductions, tax benefits. There's 3 ways in tax deductions. There's defer, deduct, and depreciate. Yes. Okay, so what that means is you get benefits from deferring the taxes if you want to, basically it's a cash out refi, right? So say you have enough equity in your property and you're deciding whether to sell it or refinance it, take out money, right? If you sell it, you're going to pay capital gains on it. So basically 50% is included in your inclusion rate. That gets included in your income. Say you're at the highest tax bracket. Let's say you're paying 50% taxes, right, on the income you make. So that's basically 50% of 50%, 25% you're paying in taxes, right? The other way to do it is to leave 75% of equity in your property and refinance it to 75%. You leave 25% equity, you refinance it to 75%. So essentially you're taking the same amount of money out anyway, right? So just refinance it. And when you do that, you don't pay any taxes. That's deferring. Deducting means to basically you deduct all your expenses that you have for the property, right? Like a lot of things.
Anything that's involved with maintaining the property.
Maintenance, repairs, even
hiring,
upgrades. Trades, even like travel, meal expenses, all that thing. It's not really a benefit because you're not really getting that income, but at least you get the benefit of doing that. You're not paying with after-tax income to maintain your property, whereas you would do that in your primary residence, right? Last one is to defer the taxes, which you talked about depreciating, right? Same thing. Those are 4 ways to make money in real estate, and that's why I like multifamily, because you can do that at scale. With a single door, with a condo, with a house, maybe even 2 units, it's really hard to do that, right? I would say in order to be cash flow positive, in my experience, you probably need 3 doors or more. The reason why cash flow is not something I really believe in or really expect to as my criteria is because I'll never be rich off of the cash flow on it. I need a lot more money than that every month to survive and to pay the bill, keep the lights on going on here and in my home. You need the scale, you need the appreciation, and I take up money that way instead, right? And meanwhile, cash flow just maintains the asset and keeps me in the market, right? So as long as you can get that cash flow somehow, whether it's substituting from the rent that you get, from the income that you get from the property, maybe you have a coin-operated laundry or something, or parking or whatever it is.
Snack bar, whatever it is.
Whatever it is that you have in your property, your multi-unit property, that'll keep the mortgage going, then you're good, right? And whether it means you have to supplement from your own pocket, it's good. All right, what else are we talking about? How to find deals in real estate, right? Okay, so what I would do is I would look at the basic fundamentals. The easiest way to do it is through the cap rate. You guys know what cap rate is?
Cap rate is essentially a percentage measure that we use to see how profitable a business is or how good of an investment it is. And it's by taking your, gross income divided by the initial purchase price of the property.
Almost. That's very good. It's a great explanation. It's a good way to compare property A to property B. Because there are no two properties are ever exactly alike. Right, but at least you can do just a quick litmus test, almost like a PE ratio. You know what I mean? Like just a price earnings ratio. You kind of know how to evaluate a property based on certain criteria, right? And that's basically the net income, not gross income.
Oh, sorry.
So you take the gross rental income minus all the expenses, you get a net operating income for the year. You divide that by the purchase price, and you get a ratio. That ratio you can use to compare it to this one, to this one, to this one. Okay, so that's called the cap rate. Basic fundamental. What are you're gonna ask me? Okay, what's the cap rate in Ontario? What's the cap rate in Toronto? People are accepting like 3. So lower the cap rate, it means that you're paying more for it, right? So the percentage of net income versus what you buy it for brings, like, the lower you get or the higher this goes, then that brings the ratio down, that cap rate down. So you're looking at, traditionally, it used to be back in the day like 5%, 6%. Now it's down to like 3%, maybe even 2%. People are still buying for, but because they're buying for generational wealth at the end of the day. Like if you're stuck looking for 5% cap rates, you're not going to buy anything, and that's the problem. So if you just close your eyes, just buy it at 4%, 3%, whatever, at least you'll have the property, and you can find ways to make it more profitable over time, right? A lot of people think cap rate's the only thing. I'm not going to buy it because it doesn't meet my criteria on cap rate. Well, the way I find deals is that you look at under market rents, because those tenants may or may not leave. I'm not saying force them out. I'm not saying be a slumlord. I'm saying over time, they will leave naturally on their own. Or maybe you improve the rent by giving them extra benefits, right? Including a washer and dryer in their units. Then you can raise the rent by whatever. That changes your cap rate calculation. Right? So you can get the cap rate higher based on things you do to the property. As you as an operator, as a landlord, that's what you do. So another way to do it is to
look at neighborhood growth and not just base your decision on cap rate.
That's the appreciation portion of the investment part of it, right? So you look at places that you think are going to be appreciating. You buy in a C-class area. So one way to rate properties is that you can do it based on a rating scale, A, B, C, D. That's kind of normal, right? So you can do it based on the building and the area. So we just closed on a C-class building in an A-class area, for example. But a lot of people say that they prefer to invest in C or B areas, not D, because D is too much crime rate. Like you're talking about schools, access to amenities, and that's how you kind of rate it, right?
And the play is too long for the D class areas too.
To turn back into a C class, then to a B class, then to an A class eventually, right? But so far, C class, like say, I don't want to name out neighborhoods because people are gonna get pissed off, but you all know them. You all know the C class neighborhoods. Those are slowly changing and gentrifying to B class, right? So invest in those ones. Maybe that's a great way to do it. Or take a dump of a building and renovate, put some capital expenditures and renovate the building, make it nicer, turn it around. That's what we did at Kensington. It was great. Back to that question, actually, Bob had a great question. How do you find those deals? Well, of course, there's the MLS. I think the majority of properties are on the MLS. Off-market deals may not even be a good deal. A lot of people are crazy about off-market deals. In my opinion, I think that you can get ripped off in off-market deals if you don't know what you're doing. Right? So certainly, but that is an avenue. Sometimes there's situations where you might want to sell ahead of time and don't sell it off market. Maybe they're older. Maybe it's just an easy button to buy it off market, right? For the sellers, that is. What you can do for off market, you can talk to property managers that manage the property. Maybe they have the first kind of experience, first experience of when the seller wants to sell or they're getting near selling.
Right.
Maybe you can send flyers, whatever you might be. Like just talk to industry people. Some of us will have insider information on properties that are not listed. That's a great way to do it.
What I like to do is actually observe what kind of businesses and what kind of people are going into areas. Because as far as an investment goes, I enjoy seeing which neighborhoods are just reaching the beginning of their potential. So, I just like to observe demographics, and it kind of dials back to how I was going through university, and I just studied data on what kind of people are moving in, how employment is affecting the neighborhood, what kind of businesses are going in. And what the average education level is for that neighborhood. Just looking at all sorts of stats like that.
Well, look at this area. This area, 30 years ago, no one wanted to live here. This was a sketchy area. Look how far it's come.
Yeah. So for those guys that don't know, we're in Riverdale and North Riverdale, sorry, just the border between North and South, and the North actually. But this area used to be really seedy. We're across from the Don Jail, and it used to be full of crime here. But it's getting better. East Chinatown, right?
Yeah. Like for me too, it's like when I bought in, it was Regent Park back in the days. That was like pretty bad neighborhood, but now it's like depreciation for the units itself is going up a lot. But when I purchased it, it's already went up like 50,000-60,000 already.
Yeah, there you go.
So it's like you said, like a C class place turning to B class, and it'll get there.
Yep. So one strategy, to look for deals. You're looking for areas that you think are going to be gentrifying. Things close to subway lines, for example, like the upcoming LRT line. That's the big one. If you're around there, there's no question your place is going to be of increasing value. Sometimes A class turns to B class too, right? Don't forget. So how do I evaluate the classes? I think I mentioned it really quickly before. I should go in a little more detail for that. But it's basically the quality of the schools in the neighborhood, right? That determines the amount of crime that you see in the neighborhood. Now, none of these things, they're all subjective measures, right? Like you just kind of know that Riverdale, for example, that's a perfect example. Is it A class or is it B class? Or is it C class, right? It's definitely C. I think it's B.
I think it's a B class,
right?
for sure.
Yeah. Maybe it's A, but you look at Plato Estates, that's an A kind of thing.
Yeah.
Yeah.
Right? So I'd say access to schools, good schools, the crime rates,
Infrastructure.
transit is a good one.
Amenities,
Such as shopping and groceries and whatever else around there, what kind of quality stores you have.
Yeah.
The people, the income levels of the people in the area. That matters as well too. That matters the quality of your neighbors.
Yeah.
Right? All that stuff. All that stuff factors in on the subjective ruling on what you would say a neighborhood is based on the ABCD scale. The property, same thing. How old it is, that's probably the biggest thing. If it's newer, it's probably going to be closer to A class based on the finishes and the materials and the amount of maintenance that's required on it.
Yeah.
Right? If it's less, then obviously it'd be a lot higher.
Yeah.
Brand new windows, efficiencies, things like that. Right?
How much money is being funneled into that neighborhood?
Into the property. I'm talking about
Into the the property in that neighborhood.
Yeah. All right, so back to the question again. How do you find deals? Everybody's looking for that. That's the biggest question. There's a whole bunch of strategies as real estate agents that we do, such as for residential, such as...
Well, I do door knocking a lot, and I have buyers on my roster that I'm looking for something specific, and I'll go out there and I'll try to book appointments to find these houses that they're looking for.
Yeah. As a multiplex owner, I get, in my personal house, they send me letters. And I know how they do this, by the way. But and a few people out there know how to do this. And I'll tell you guys off camera how to do this. But basically, I get letters to my own house based on, are you willing to sell? Here's our multiplex newsletter. They're smart. They know how to do this. What else are you gonna do to find multiplexes? Oh, you can create them too. Don't forget. That's the other thing. If you see a big house that is large enough, has enough square footage that you could fit a few units in, you can take your steps to go to committee, get if you get a minor variance if you need to. Maybe you have to rezone, probably not if you're a residential area.
Yeah.
But there's ways that you just kind of see it. As long as it meets building code and fire code, you're allowed to have 2 units for zoning in Toronto.
Yeah.
Right? So maybe you could take one and turn to 3 units.
Yeah. Some people do it in smaller houses too, basement, main level, top level.
Yeah.
And they get the proper zoning and get it all done. So yeah.
Someone did that in my neighborhood right on my street. They turned a 26 by 100 foot lot into, from one single family home that was detached into 3 separate units with water and electricity all separately metered.
Yeah.
Nice.
Yeah, generates about $65,000 worth of revenue based on rental income.
How else are you going to find deals based on what creative ideas you have so far?
Yeah, just basically talk to other agents, like what they have, like like for example, for you probably have tons of maybe you come across it more often for off-market properties and all that because you're in it, right? Door knocking, like you said, is a good one. Just sphere of influence, I guess, too, right? Just talking to people, and let's say you have a client who's thinking about investing in something, maybe kind of pitch it their way, like, well, don't you try to make your house to be like a multiplex or something like that, right? That could be a great idea, and then they end up buying something else or investing in something else. So that's another way.
That's another way to do it, actually. That's a good way. Now you mentioned that. If you own a house right now and you're looking for another investment, go buy another house. Go buy another place to, I know it sounds easy in theory, right? But go buy another place to move, right? You might be in the situation.
Yeah.
Go buy another house.
Or even
keep your house.
That's what we're
Keep the existing house that you have and turn it into 2 units. And with garden suites coming in, that might be 3 units.
Exactly. Or laneway house too. It's cheaper to do laneway house and garden suites, and then you could live there and then rent out the main house, right? So that's
There
not
you go.
really
You're
cheap.
showing me your next triplex.
Well, and that's what we're looking at right now. We're looking because we bought our place right now because of the laneway and the potential to build a laneway house.
Yeah.
But we know that once the kids are starting to get older, we're going to move to something else, and we want to hold on to that house. And hopefully by then we built the laneway house. You have like income from the house as well as the laneway house.
There you go.
That's awesome.
There you go. And we're not talking about this in terms of greed. Like, yes, we're doing our best for our families because we need to. But at the end of the day, you're providing. It has to be safe. It should be safe anyway. Hopefully, you don't do it some way. Hopefully, you do it with permits and do it legally. But the reason why that's important is so that you provide safe housing for people as alternative options instead of just renting those expensive condos downtown. You can have cheaper options for people to rent, which there's a huge need for it with all these people coming to Canada.
Well, and it's not just for us. This is the type of stuff that we look to do for our clients.
Well, that's it. Yeah, another way to do it. Talk to people that are having troubles right now selling their place on their own, right? Approach them.
Yeah.
And maybe we can have a buy it now price from them, and maybe we'll buy it. Maybe we'll get a group of our investors together to buy it. Other questions for multiplexes? Multifamily, anybody? No? Going once? Going twice? Gone. Thanks for watching. See you next week.
Add it up.